Are you thinking of starting an LLC or already own one? Understanding how it's taxed could save you or cost you thousands each year. Let's break it down. In this video, I'll explain how LLC taxation works, including the default rules and the options you have to reduce your tax burden. With 12 years experience as a tax attorney, I've helped countless LLC owners structure their taxes for maximum savings. I'm Brad Paladini, a tax attorney specializing in helping small business owners like you navigate complex tax rules. The first thing I want everyone to understand about LLCs is that you cannot be taxed as an LLC. There's no such thing as being taxed as an LLC. An LLC is a legal vehicle that holds your business. That LLC, by default, will be treated certain ways for tax purposes, or you can elect to be treated differently. But there is no such thing as being taxed as an LLC. So what are the options? If you are a single member LLC, meaning that you are the only owner, by default, you will be treated as a disregarded entity. What does that mean? All of the income and all of the expenses of the LLC will be reported on your personal Form 1040 on the Schedule C. So everything shows on your personal return. Because you're a disregarded entity, all of the business's profits are subject to self-employment tax. So, for example, your business grossed $200,000 for a particular year. It had $100,000 of expenses, $100,000 of profit. All $100,000 would be subject to both ordinary income tax and self-employment tax. Okay, so that's the default rule if you are the only owner of the LLC. What if there are multiple owners? Right? What if you and your buddy start a business and there are two members of this LLC? It is a multi-member LLC. In that case, the default rule changes. Instead of being treated as a single member, sole proprietorship, disregarded entity, it is now treated as a partnership by default. So how are partnerships taxed? The partnership would file a separate tax return, a Form 1065, that would report all of the business's income and expenses. And then from there, a K-1 would be issued to each member. So going back to the example that I gave before, 200,000 of gross receipts, 100,000 expenses, so 100,000 of profit, that would be split among the members. Now, how is it split? That's kind of the cool thing about partnerships. You can more or less split it however you want. So you could do 50-50, 75-25, 80-20, however you want, you could split that income per the partnership agreement. So you have a lot of flexibility with partnerships. So that is the default rule if there's more than one member of the LLC. So those are the default rules, meaning if you start an LLC and you don't do anything, that's how it's going to be treated. So if you're the only owner, it's a disregarded entity. If there's more than one member of the LLC, it'll be treated as a partnership. Now, you can elect to be treated differently. So as an LLC, you could elect to be treated as an S-corporation for tax purposes. You would do this by filing a Form 2553. What are some of the potential benefits of an S-corporation? Well, you could potentially avoid paying all of the self-employment tax that we talked about earlier. So using the same example, there's 100,000 of profit for the business. If it was a disregarded entity, all 100,000 would be subject to self-employment tax. With an S corporation, you're required to pay yourself a reasonable salary. And there's a whole bunch of facts and circumstances that go into what a reasonable salary is. But just for example, let's say it's determined that a reasonable salary is $50,000. So you would get a wage of $50,000. You're basically paying self-employment tax, really payroll tax on that $50,000. But the other $50,000 of profit is not subject to payroll taxes. It's only subject to ordinary income taxes. So that's the big benefit of electing to be treated as an S corporation. S corporations are not a one size fits all. It's not going to be helpful for every single circumstance. There's a lot of cases where it's just not the right election to make, but it is an option. It's not the only option, however. If you have an LLC, you could also elect to be treated as a C corporation. How are C corporations taxed? You would file a separate return, a Form 1120. That corporation would pay corporate taxes on the federal level. In addition, you would pay yourself a reasonable salary from that business, which you would pay taxes on personally. And in addition, if you were to take dividends from the corporation, those are also taxed. So the big downside with C corporations is that it is subject to two levels of taxation. The corporation pays taxes, but also on the personal level, you pay taxes as well. So C corporations, again, not appropriate for everyone, but there are some circumstances where it makes sense. So the options, right? By default, if you are the only owner, it's a disregarded entity, everything goes on your personal return. If it's a multi-member LLC, by default, you're going to be treated as a partnership. In either circumstance, you could elect to be treated differently. You could be treated as an S corporation, or you could be treated as a C corporation. And again, there is no one size fits all approach. It's really going to depend on the type of business you have, where you're located, where the revenue is being earned. Some states have extra special taxes for S corporations, which makes it not as beneficial as other states. If you plan on selling the business one day, one election might be more beneficial than another. So it's really going to depend on a lot of different types of circumstances and a lot of different facts. And anyone that tries to sell you on like a one size fits all approach is really leading you astray. If this video is helpful in understanding LLC taxation, please take a moment to hit the like button to help other business owners find it too. And if you need help structuring your LLC for tax savings, click the link below to book a free consultation. My team and I can help you decide the best tax strategy for your business.